Alrighty, traders, welcome. It is Friday, January 5th, end of the first week of January 2024. We had a great week each day, setting a new all-time high and finishing on a new all-time high today as well. So good stuff. Got some trades for you today. Take a quick look at the markets as we prepare for Monday. I spent about an hour and a half today doing a video for members, really on how I go through looking at the portfolio. We can touch base on that briefly here today, but I go through looking at every single one of my positions. Takes about 5 minutes, really, as you're going through it. I'm looking to see what adjustments need to be made on 112s. Are any strangles in trouble? Do we need to take anything off early? Adjustments, all of those particular things. And then what I do in the evenings, as soon as the market's closed, putting the final numbers on the day. I really don't want to spend probably 30 minutes to an hour a day at most, of which half an hour of my day is doing this video. And this video, again, is for me to set up what I want to do on Monday, as well as communicate to you guys what I'm doing. So this is 30 minutes of my day. 15 minutes of my day is really reviewing all of the different accounts that I have, the different accounts, from small accounts to IRAs, trading accounts, PM accounts, all my different accounts. We go through those. It only takes about 15 minutes to review those. And then if I have some trades to put on, maybe another 15 minutes, and that's it. I'm in and out of the market probably about an hour a day. In our Discord service, yeah, I spend, 5, 6, 7, 8, 10, 20 hours a day in there. I'm always answering member questions. And the only reason I would be in the market or in my trading platforms is really if I have to look something up to answer questions, because it's pretty much a Q&A trading room all day long, 20 hours a day, most likely, between myself and other moderators in there. But as far as actually being in the market and trading and looking at my accounts, it's maybe 15 to 30 minutes a day when I'm trading or having to put trades on or take trades off. 15 minutes to review, 15 minutes to add and subtract new trades. Takes me 5-10 minutes to put them in the tracker, and then cut this video at night. And this video, where some of you, hey, don't like, hey, just spend your time, Tom, talking to me about strategies, and I want to learn the bear trap or strangles or credit spreads or naked puts or whatever it is we do. How do you hedge? It's all good. I don't mind talking about those things, but I want to give you a glimpse into my world, and this is how we do it. And I don't want you spending all day in the market. I mean, who wants to spend 8 hours a day glued to a screen looking at a bunch of lines? So let's jump into the lines and numbers and wrap it up. So the markets rose a little bit on the session today. We rose just fractionally. If we look at SPY, up 0.64, which is just about 0.14 of a percentage. We're still just hanging right around the 20-week EMA. We tried to move up, closed off of those highs for the session. We're just sitting right at the 21 EMA. MACD falling. RSI has been falling, hitting right around the 50 mark here. And if we take a look at the weekly chart, we had a down week this week. It was a good pullback week, really great for the market, really good for our portfolio. Love when things sell off and things calm down a bit and we see a little bit more two-sided action. So I really like the way the daily chart looks. Weekly chart, I'd like to see some more pullback. Maybe we can get to that 21 EMA. Down around the 450 mark, something like that. We'll see if we even get there before we reverse higher. But overall, decent look on SPY. I think it's okay to dip our toes back in the water just a fraction, which we did today. If we take a look at the Qs, we had pretty much a flat day today, up just fractionally, again, 0.12%, not much there. RSI heading lower, MACD heading lower on the daily. The weekly first down bar week, a good week pullback, and might be a little hard to see in here because I got two different things running, but I've got a support level here on the Qs right around 395. That's also the 618 fib level that maybe we can get a bounce off of that level next week. We'll see what happens in the market, but not too bad, like where things are. And if we take a look at IWM, at the small caps and the Russell here, we had a Another small down day here, down 0.3%. MACD, RSI are heading lower. RSI breaking the 50. Fairly bearish outlook on the Russell as we've had a pretty good pullback week this week. So you see MACD potentially rolling over along with RSI on the weekly charts. Maybe things drop back down a bit. I think if we get a pullback again to the 21 EMAs somewhere on the weekly charts, I think this would be super opportunities to get long a little bit more bullish. We take a look at the number of stocks above their 50-day moving average on the S&P, dropping again today, so down over 1%. And again, I think this is a very bearish indicator right in here. Doesn't mean we can't bounce, doesn't mean we can't go higher, but I think this thing is really sitting at one of the highest levels that it's been. Every time it's gotten to this level, markets have reversed. All right, taking a look at the put-call ratio. Let's just jump into the full chart on this. Put-call ratio continues to move higher. The higher this 10-day moving average is on the put-call ratio, the lower the market's going to go. So you can see on this downtrend here, the market was trending up. Okay, now we've broken that, and this downtrend, let's draw it back up here, but this downtrend that we were in here, okay, is for the most part being broken the other way now. So we've broken this downtrend, and now we're heading back higher. More puts being bought, much more bearish tone, potentially portending some sell-off. So again, I think I'm still a bit more bearish overall, but I like the moves that we've had. Market, I think, is still a bit overextended, but this was a good week for it. All right, VIX dropping back down to 1335. It's just dead. Volatility is low. Looking at the US dollar, pretty much unchanged on the session, up maybe a fraction today in the US dollar, but this remains in a pretty good downtrend. But MACD and RSI on the daily and the weekly look to be moving higher. Do we get a bit of a bounce on the US dollar? If we do, let's see if that affects the markets and starts to push us in one direction or another. All right, looking at the 10-year Treasury here, that was up slightly on the session, up a little bit over 1%. So Treasury index, the rates moving back up. So we had hit a low back here on December 27th, about 3.78%, and we're back over 4% now. And again, I think, I keep saying again, but I think the markets got ahead of themselves thinking the Fed's going to cut 4, 5, 6, 7 times. And I think there's a bunch of people out there saying that that's going to happen. We got unemployment numbers today. We got PMI numbers today. Yeah, the market rose on it, but unemployment dropped on the session. So we had unemployment dropping on the session today, which you would think is a bad thing for the economy, but it's something that should get the Fed, get the Fed's attention. The Fed wants to see unemployment rising. We need to see inflation coming down, unemployment rising, and slowing down this hot economy a bit. Now, PMI dropping, I think, still positive though. Still strong numbers overall. So the economy is still in really good shape, and payrolls are still in pretty good shape. Even though inflation might be starting to ease off a bit, is it enough for the Fed to make a decision? And one of the things that I want to take a look at is, if you remember the Fed Watch tool and trying to figure out what the Fed's going to do, if we look back out to May, okay, you now have a 38% chance of a Fed rate cut, and I think there's even some like a 50% chance of 2 rate cuts. I think it's bananas. I don't think 2 rate cuts are coming in February right now, and we're still sitting at a 6% chance of no cut. But I think the probabilities are changing a bit. If we take a quick look at the current target rates, let's see, for June. Okay, for June, we're looking at I would say 2 rate cuts by June, according to this. And there's a 50% chance that we're going to cut, 75 basis points by June. I think it's aggressive. I think markets are a little bit ahead of themselves, and I think you really have to take a look at it. In fact, if we look at the comparisons, let's go back to March here. So if we look at March, maybe I'll share my screen with you a bit. Let's take a look. Okay, we're looking at where we were. So the blue is currently where we are, and the current target rates up here at 525, 550. Okay, we are showing a 31% chance, and I don't want to do the comparisons. Let's do a quick current. So 525, 550. This is where we are. So currently there is a 31% chance that we're not doing anything. And there is a 63% chance of a 25 basis point cut. Now, how has this thing moved for the last couple of weeks? Well, it's up slightly here of the rate cut from a week ago, but it is down from a couple of weeks ago where the probability was 73%. So the chances of the Fed not moving now has definitely increased over the last couple of weeks. And not a dramatic improvement. So I think the one thing you have to really start to pay attention here is what will happen if the Fed does not cut in the next 2 cycles and potentially 3 Fed meetings. I think the market's priced it in. I think the market thinks we're going lower on rates. We've already seen this 10-year dropping a full percentage point from 5 to 4%. So it's already factored all of this in. I keep talking about this every single night, that I think it's overdone. I would not be surprised to see this 10-year Treasury note start to eat back up, maybe to the 4.2, 4.2, 4.3, 4.4 range. And you've got MACD and RSI rising. So the momentum is that the Fed rates are moving back up. And how does that affect TLT? Well, again, TLT is just taking another hit today, down another percent as MACD and RSI continue to fall on the daily chart. I think TLT continues to fall into the low 90s, the mid to low 90s over the next month or two. And if we see any data or any signs that the Fed may not cut in March, I think you're going to see a bigger move here. How does that affect the market? We'll have to see. But I think if the Fed signals that, hey, we may not be cutting soon or as much, the market's going to sell, bar none. So the market's going to sell off. All right, so taking a look at some of the futures, any trades that we can identify out there, I do like the Aussie dollar. So I think the Aussie dollar here is a good opportunity. On the daily, we've already pulled back to the 21 EMA. It's really nicely centered here. We've pulled back nicely on the weekly. I think the Aussie dollar is a good opportunity for a 112. I think 6B, which is the British pound, is a good opportunity on this pullback. I think as the dollar continued to sell off a bit, you saw some nice action here. And if the dollar continues, okay, to move back higher, then I think you're going to continue to see things like the euro, which is the inverse, continue to drop off a bit, giving you some opportunities. I don't think the dollar is going to crash. I think it's a nice little bit of a bounce here on the dollar, which is making some of these Forex trades a lot more exciting here. I think you can put some 112s on here so that if we do fall a bit more, you're going to start to net some great profits on these. Same thing in oil. Nice update on oil today. So oil rose on the session, up 2.4%. MACD, RSI heading higher, breaking the 50, moving higher there. If we're looking at the weekly, got 3 weeks now of a reversal with RSI moving higher. I love where we are on oil. We closed some more trades today on oil, so we'll cover what those are. But we have been just making fantastic gains on oil here, and it continues to be one of my favorites. And I'm probably looking, based upon this chart, and what we're doing. I think I'm going to try to get back in next week on some more oil 112 trades. And we're going to use pretty much the standard 112 setup. And then on gold here, hanging right out at the 21 moving average, not doing a whole lot of anything as it is getting more and more congested here as the ATR bands are starting to pinch in a bit. So it's coiling up for potentially a move one direction or another. Right now, it looks a little weak if the markets keep going higher, but I think gold's still a good trade. All right, let's look at copper. Another pretty good down day on copper. Absolutely playing into our 112 trade. Our 112 trade's now up 140% in 18 days, and our strangle's up 20% in 9 days. So both of those are perfect. I love where copper is sitting. I think this is a great trade opportunity here. And then bonds, as bonds continue to weaken here. Now, do they, do we, have we broken this trend? Do we continue to break the trend? You've got the momentum heading down on bonds. I think this is setting itself up for a nice 112 trade, which is exactly what we did today. So we did get a trade on, didn't get the best fill on bonds, but we did have a good trade on that. And for me, it's all about the suite of bear trap trades. And we do have some strangles on. We don't have as many as we've had on before. We've really bulked up all of the different varieties of bear trap trades, or the 112 trades. The Bear Trap was our original name on those, so I really kind of just refer to them as that. But we have multiple varieties. Okay, you've got longer term, you've got shorter term, you've got hedge versions, you've got different hedge versions, you've got different ways to adjust them. It's the most versatile trade that I can think of out there, and we're also strangling them as well. So we have the 112 strangles. So there's a lot of things that you can do with these particular trades. So the Bear Trap Strangle, we just closed a few of those on oil. Fantastic. We closed a few of those on oil on the S&P. Really made some good gains on those. They really enhance the overall percentage gains that you have. And I think you have to have a good plan for that. I really like where those are landing. So there's the futures. If we take a look at some of the sectors that are out there, I think most everything was in the green. We had a few things in red that were just barely red down here. Semiconductors leading the way, regional banks leading the way, pharma also having a decent day today. Financials continue to be very resilient here, and financials look pretty interesting. Communications, oil, utilities, all doing pretty well on the sectors. And then Apple still just struggling. Once Apple turns around, this market could really get going. It's holding on pretty decently considering the weakness in Apple, weakness in Microsoft. Both of those look pretty ugly here. Amazon had gapped down yesterday, got a little bit of a bounce today. Meta is just really hanging in there very, very well. Google, weakness, looks pretty weak here, and NVIDIA is looking decent. So you got NVIDIA, and we'll even throw Tesla in here, still looking pretty weak. So almost all of the Magnificent Seven looking pretty weak, except for really Meta and NVIDIA. Everything else not looking too good, and I don't think that portends well for the overall markets. Let's take a look at the accounts and some of the trades that we had on in the account. So on the day today, January 5th, 342 on Delta, 0.08, which is way below our threshold. So we're very Delta neutral. 754 on Theta. Our Theta is low. I want to get more Theta trades on. I'm strangle poor right now. I only have 2 strangles running, and strangles is where I get a lot of really good Theta out of it. And because I have a lot of 112 trades, and we've already closed out naked puts on a lot of 112 trades, it's affected our Theta a bit. We're at 0.19, pretty low Theta. We'll really be working next week to add some more Theta to it. I got some great ideas that we'll be sharing. We ended the day up at 403,956. It's another new all-time high in the Income Navigator portfolio. So yet another new income in all-time high in the portfolio. BP at 241,820. The BP on our Bill ETF is 41,000. So when you take that out of play, we're sitting right at 50% even. 50% BP usage on all of our trades that we have on. Perfectly flat, exactly where we want to be. If we get some things that come off and things calm down over the weekend here, I think we can look to put some more trades on. And I did get new trades in the account today. So we did put some new trades on. And we had another $2,400 a winner. So we have booked $9,170 already in the first 4 trading days of 2024. So we're already up $9,170 in this account. That's it for the week, which is also our monthly. We're up 2.32% for the month in this account, and we're up $8,400 in net lick alone, which is 2%. We are almost 2/3 of the way there to our entire goal for the month in 4 trading days. It doesn't mean we can't lose, but if I take a look at all of the trades that we have on out there, we currently don't have a single losing trade. They're all in the green right now. Knock on wood that we continue that way, but right now we have all trades that are running. And if we take a quick look at what we have open, I'm sitting down here somewhere around 67 trades, a little bit less than that. So probably 20 to 30 trades, because some of those are different legs. So cut those in half, probably somewhere in the neighborhood of 25 trades on right now. So 25 trades, no losing trades currently. So everything is up. We're at all-time highs in the account. Here's where we are strategy-wise so far. We're down $130 because we made a pretty unique trade today on a 112. We modified one of our put debit spreads, turned it into a Black Swan Hedge, which is part of our strategy. So it's part of my trade plan that I publish out there for the members in Discord. Part of that trade plan incorporates how to convert a 112 into a hedge, okay, or how to create a hedge from it, and then how to change that hedge from a put debit spread to a Black Swan Hedge as well. So it's something we're doing in the trade group. We did that today. So it cost me $130 to put on a pretty nice hedge in there, but it comes out of the profits on the long-term 112s. Gold Strangle, we did close one of those this month so far, not today, for 2,600. Our oil 112 up 41.20 so far on the month there. We had an FB 112, which is one of the unique versions of the Bear Trap trades that we have on, up $610. And then we've made $1,900 in spec trades. Let's take a look at what those are. So today, this is our second oil 112 trade. So we closed the naked put in the oil 112. We had 8 of these running. We managed to close that for $2,560 today. 94% premium capture is what we are seeing overall. So nice trade here. We managed to close it for $2,500, took all the risk off, freed up all the buying power, booked $2,500. When I'm looking at my overall goals for the month, which I'm going to reassess a tad, my overall goals for the month, we're already in 112 trades. We are already ahead of plan. So if everything continues to go well, that's the standard 112, not the long-term Bear Trap trade. So we're already ahead of goal, as you would assume, that you're already at $9,000 in the first 4 days. So the market's been falling or moving sideways, and yet we're hitting new all-time highs so far every single day for the first 3 days. No, that's not going to last. We're going to have some down days coming. But what I'm hoping is that we continue to see just a slow bleed down in almost everything that we're watching, whether it be oil, S&P, gold, copper, NASDAQ, all of those where we have our trades on, we are set for the downside on a slow bleed. That would really pay off well for us. Right now, we haven't really seen that, but when we get into the bear trap trades, we are looking to catch that bear in the trap, and we need the markets to cooperate a bit and drop 5-10% from here. That would really propel us and kick us off to a massive start for the year. I think we're very, very well hedged. We went through all of our trades today. We've got a couple great long-term, I don't like the word Black Swan hedge, but we've got two pretty good size hedges on, along with a lot of put debit spreads that we have going. And I think that's really setting us up. We did some calculations today that had the market gone down about 15% or so. And if we stopped out of every trade at a 2x loss, how would our hedges pay off? And right now they would offset our losses if everything was stopped out tonight at 2% at a 2x loss. And I don't think that all would happen because we don't have everything is not in just ES or in the S&P. I don't know that gold and gold may just rocket. Oil may rocket if the markets sell off. Cattle may rise if the markets sell off. Bonds may rise if the market sells off. So not everything is going to go down and is correlated together. But if everything did, we have enough hedging to cover all of that and give us an extra $10,000, $15,000, $20,000 in gains on top of that. So I'm okay. I feel pretty good. Will it work out perfectly that way? No, nothing does. If we wake up tomorrow and we blew past all of our stops, we're going to have some pain. But I believe we're properly hedged for that. Part of our trading is hedging. A lot of it is working the bear trap trades, the strangle trades, the naked put trades, and everything else that we've got working on here. We'll get back into, and we've got our bill, which we up our portfolio value in the bill ETF. So that thing is actually up now. We have $41,000 in margin, controlling $164,000 in bill. Of the $164,000. Even at a 4.5% interest rate, that's $7,000 a year, which is going to net us at least $615 a month. That'll pay for some nice hedges as well. But we're looking at least $7,000 a year on our account, and that's going to provide about a 2% overall return. So I'm pretty happy with where we are on that. So portfolio set up well. We're seeing some good things here. We've got some great trades running. And again, today we closed naked puts on an oil 112 trade. After 45 days, we closed them for 94%. And then we also did some conversions here on ES 112 trade, and where we turned it into a full hedge, costing us about $130 to do that. If you like this video, if you're getting value out of it, click that like button. I know I hit it every night on you guys. Subscribe to the channel. We've got great stuff coming out, some really cool things. If you want to join us in the Discord, check it out below in the description. You can use the code KING, get $50 off the first month. Join the other hundreds and hundreds of members that are in there. It's an unbelievably great group, really smart people, and it's growing by leaps and bounds, but you're seeing a ton of people contributing ideas, and it's really enhancing the portfolios of others every single day. I'm seeing something, posting up about how people are hitting some new all-time highs in their accounts, how they're doing well in here. So this guy's already hit 3% in one account. He's already hit his all-time highs and his 3% for the month. So great stuff happening. If you want to get your mind right, get your trading right, get on a plan, get disciplined, exercise patience, understand how to trade this market, come and join us. If not, have a great weekend, everybody. Enjoy yourselves. Stay safe out there, and we'll see you back in the markets on Monday. Take care, everybody. Bye-bye.